Hello and welcome to the look ahead for Tuesday, the 28th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So straight in there with the earnings, we've got a couple of updates from Workday, CrowdStrike, and Hewlett Packard Enterprises due tomorrow. This comes after a relatively quiet last few days as far as earnings are concerned due to the Thanksgiving holiday. On the economic calendar, first up will be Australian retail sales. Month on month in October are expected to increase at a slightly slower pace of 0.2%, down from 0.9%. Then German GFK consumer confidence. Now, consumer confidence is expected to improve after 3 straight monthly declines. We're expecting consumer confidence to tick up very slightly to -27, up from -28.1. And actually, this comes in with a theme that we've been seeing from German data just recently. It does seem to be just getting a little bit better. The PMIs didn't contract quite as badly as forecast. And on Friday, we had that German IFO business sentiment data, which was also improving for a second straight month. So there is this sense coming through that perhaps the downturn in the German economy is starting to bottom out. Now, as far as the DAX is concerned, taking another look here at the DAX, it's had a phenomenal rally across November, as have many stocks in Europe and the US, or sorry, many stock indices in the US and Europe. And that's basically, we're at this stage where the market is assuming or is pricing in now that the next move from the major central banks will be a rate cut rather than another interest rate hike, and that's supported demand for equities. Now, we can see here the price in the DAX, it's just struggling around that 16,000 level. We've seen some consolidation after the strong rally that I said that pushed it over that 200 SMA. It is in overbought territory on the RSI, so buyers should be cautious. But if there is a move above that 16,000, a strong close above the 16,000, that would then bring in 16,430 into target, which is the June high. On the downside, failure to push above 16,000 could bring 15,850. That's last week's low into focus. But really, I think as long as the DAX remains above that 200 SMA, which is at the 15,670 level at the moment, then I think the bulls are going to be staying in control. If we do see a break below that 200 SMA, then that brings 15,450, the August low, back into focus. So just moving on, we'll also be watching tomorrow. President Christine Lagarde will also be speaking. That's something to keep in mind as well. She's expected really to reiterate, the stance that she's adopted recently as far as inflation is concerned, that the fight isn't over. The central banks don't want to give the impression that they're done, but they want to keep that option on the table of more hikes should they be needed. Also in focus will be the US CB consumer confidence data for November. Now, we'll be expecting here a slight deterioration in the consumer confidence. It will mark the 4th straight monthly decline. It's expected to fall just to that 101 level. Basically, what we saw in the previous report is that consumers are still concerned about rising prices. They're also concerned about the political picture and also what's been happening in the Middle East. Now, the expectation component of the consumer confidence is expected to remain below that key 80 level, which indicates that a recession is still expected for next year. I mean, recently, US data has been sort of showing towards the softer side, suggesting that the Federal Reserve's aggressive rate hikes are starting to cool the economy. But then saying that, we saw data last week, jobless claims were stronger than expected, which just raised concerns or highlighted the resilience that we're seeing in the US labor market. But what we're generally seeing is that the market is pretty convinced, as with the ECB, that the next move by the Federal Reserve is going to be a rate cut rather than a rate hike. And that rate cut, if we have a look into next year, according to the CME Fed Watch tool, in May next year, the market believes that there is more likelihood that the Federal Reserve will cut rates than not. Now, obviously, this expectation that the Federal Reserve is going to be moving towards cutting rates and sort of more towards that dovish pivot has been pulling the US dollar lower. We've seen the US dollar has fallen really quite sharply across the month of November. It's fallen below the 200-day moving average, and it's just heading towards that support level there around the 102.80 level. And if we get a break below that, then we can see that falling trend line that dates back to the end of last year. That could offer some support around the 102.40 level. If you like what you've seen from me today, then please remember to put a like on the video below and also subscribe if you would like to receive more videos like this.